Hello, welcome to the accounting class. Today we are going to discuss some multiple choice questions of the chapter number 2 of the course ACCT 101, the principles of accounting. So let us begin. The first question is left side of T account represents what? So whenever we are making the T account, we see to the left side debit and right side of it is credit. So the question is left side of T account represents, the answer is debit. Salary paid to employees is an example of. So whether you are paying salary or any other expense, so salary is an expense and it is paid to employees. Employees are within the in business organization, so they are in the business organization. Therefore, any transaction related to the persons who are within the organization are the internal transactions. So we can have the two type of transactions, internal and external. When the goods or supplies are sold to outsiders to the customer, it will be external. Or when you are purchasing goods or supplies from outsiders, then it will also be external. But the salary paid to employees is an internal transaction because the employees are within the business organization. Recording transactions and events are called. So recording, you keep this word in mind that especially we use recording for journalizing. Okay, the correct answer is journalizing. So when we record, we will say that we are journalizing, and the journalizing is done in the chronological order. Chronological order means in the date wise. Increase in an item of asset is, if any item of asset is increasing, so what we do, if the item is of an asset is increasing, we do it debit. Okay, if the item of an asset is decreasing, we do it credit. So the answer is increase in an item of asset is debited. The correct answer is B, debited. Which of the following is an item of assets? So we'll see all the items. Which of the item are asset, we have to identify. Account payable, this is an item of the liability. Dividend is an item of equity. Note receivable is an item of assets. Common stock is an item of equity. So what is your answer? Your answer is C. Note receivable is an item of asset. A collection of all accounts. When we keep all accounts together in one book, that is called, I give you 1 minute of time. You have to answer it. The answer is ledger. Okay, so ledger is a book of all accounts. Ledger is a book which contains all accounts. You will have several accounts in ledger. You will have cash account, you will have bank account, you will have supplies account, furniture account, equipment account, account receivable account, accounts payable account, etc. So too many accounts are collected at one place, and that is called ledger. Which of the following will not affect equity? Will not affect. So let us see. Increase in the common stock. Common stock is an item of equity, so it will affect equity. Dividend is an item of equity, so it will affect equity. Increase in revenue is also an item of equity, so it will affect equity. But loan, paid loan, this will not affect equity because loan is an item of liability. Okay, and if you are paying it in cash, it is an item of asset. So paid loan, in this transaction you will have the two items, but the two are not belonging to equity. Therefore your correct option will be D, paid loan. This is the answer. What is the journal entry if the supplies are sold on account? You have to see, supplies are sold. So when supplies are sold, supply will go out. Okay, and you are selling it on account. So on account, if you are selling, your cash will not come, but your account receivable will increase. Okay, so let us see account receivable, account debit to supplies account. The first entry that you are seeing here, let us see what is representing the first entry, cash account debit to supplies. This is the journal entry when supplies are sold on cash. This is the journal entry for that. Second entry is when the supplies are purchased on cash. The third entry, the third entry is actually is a wrong entry. The fourth one, account receivable to supplies. Supplies are sold on credit. Sold on credit. So what is this? Supplies sold on credit or sold on account is the same thing. So the correct answer is D. Supplies sold on credit or supplies sold on account. Which of the following ratio describe the relationship between the amounts of company's liabilities and assets? The correct answer is debt ratio. This ratio is the ratio that will describe the relationship between the company's liabilities and assets. The next question is the question, wages paid to workers for installation of the new machinery should be debited to, which means that when you are purchasing a new machinery and you are installing it, and for installation the amount that you are paying to the mechanics or to the engineers, so what will you do with this amount? Will you debit the wages account? Will you debit machinery account? Will you debit factory expense account? Will you debit cash account? What will you do? This is a question for homework. You have to do it and give your answer in the comment. I will check and give you the correct answer there. Hope this video is helpful to you. If you comment and subscribe the channel, I can make more videos for the upcoming chapters inshallah. Till then, good luck. Bye bye. Take care.